Mama proud, I got me some paper. Niggas don't want no smoke, no vapor. They say I'm a plate maker. Touchdown in LA like the Lakers. I've been on my grind like a skater. Hood fave, had to go make a move. I finessed the word for them dividends. With this chain, I can't step in.
All right, guys, Austrian Hispanic here. I just want to thank you for tuning in to the first installment of a web series that I'm doing. I'm going into mostly market news, but I'm going to go a little bit into politics as well. But the first episode, I just want to go a little bit into what kind of sparked my interest into doing this. And I've been playing around it for quite some time, but I just decided to take it serious because it's that point in time. It's for me, it's the breaking point to really get serious about this. And I hope that you guys get serious about this as well, because I'm starting to see things that are developing. And for example, we're seeing Russia and China create a trade bloc that is not going to be in dollars. They might do a smart ledger. They might do a blockchain. Who knows? They might call it the Putin coin, the G coin. And it's not going to include the dollar. And we're seeing BRIC countries start doing the same thing. And what's happening is that when you're not using the dollars in trade, when you're not doing we're not using dollars to price oil, you're not using your dollars to buy oil, which is about we have about three components of the dollar. We have the consumer dollars, we have trade dollars, and then we have Petro dollars. So when these trade dollars and Petro dollars and trade dollars aren't being used, they're going to get repatriated, and we're going to have bit inflation. The Fed says that ideal 2% inflation. I think it's 5 times that. I think it's 10% inflation. They just don't want to admit it. They use these crazy metrics and crazy equations, all this jargon to demystify inflation rates. I mean, to mystify, smoke and mirrors inflation rates. But that's point number one. Point number two is we're seeing quantitative tapering by the end of 2018 from 180 billion of March of 2017. So we're seeing the Fed starting to sell some of its bonds, some of its treasury bills, treasury bonds. All these instruments that the government creates that sell it to the Fed. So the Fed's starting to sell them off, and so it's going to create more. What it is, it's more sellers and buyers, because now you have the Fed competing with everybody. It's a very interesting. What's going to happen? What's going to be interesting? What's going to develop as far as this goes? I don't know too much about it. I'm not going to touch more into this. As soon as I get more information, I'll let you guys know. But the facts are the facts. I'm an analyst. I go where the facts take me. So we have $14 trillion that the government, the Federal Reserve created. $14 trillion since 2008. So they have this, the Federal Reserve, they're printing money. They're 14 trillion. It's a number much, much bigger than that. But that's what they're going to admit to. We know for a fact that the Fed has $21 trillion missing from its balance sheet. And essentially the government said, you know what, let's not touch this. This is a matter of national security. Let's not go into that. $21 trillion, not million, not billion, $1 trillion. So they're working with each other, working tandem. We're seeing a global debt hit $70 trillion. That's a huge number, and most of it it's dollar denominated. And so with that said, when a country gets a loan from the IMF, usually in the form of SDRs, then it's dollar denominated. At the end of the day, their debt's going to be satisfied in dollars. They're going to service their debt in dollars, so they have to use their local currency to buy dollars to service the debt. And if you have to use more of your local currency to buy dollars, it just puts a stress on on your cash flow. So we're starting to see emerging markets feel the crunch of a rallying dollar. So it's vice versa. They're inversely proportional, in my opinion. The largest part of home sales. All right, guys, talking about what happened in 2007 with the subprime mortgage market and how that affected, that was essentially the first domino to fall. It might not be the first domino this time around, but here's a couple facts that I can throw at you guys. The largest part of home sales, existing home sales, has been down for 4 months, 4 consecutive months. We've have copper dropped 22% since June. We have lumber dropped 40% since May, and these are building materials. So they're saying what I take out of this is there's not a demand for these materials. There's not a demand for homes. People aren't buying homes, which should be an indicator of a robust economy. But we just don't see that. We've seen the value of equities is 1.5 times that of GDP. Never before has this happened. So we're starting to see what's going on, the symptoms of this what is known as fractional reserve banking, fiat currency, all this other nonsense that the Keynesians like to promote. We're starting to see this starting to fold out, and it's not going to be pretty for us. But I think there is opportunity here, definitely, especially in commodities, noble metals, and that's what I really want to touch on with you guys. So I'm going to go a little bit into dollar index, and let's see what the dollar index is doing. So the dollar index is just it's the dollar weighted paired against a basket of currencies: euros, um, yen, uh, Swiss francs. That's I think the big ones. But it's starting to weaken a little bit. We're seeing it hit that 94.20. It's at 94.21. It's at a little bit at a support level here. But will it break support? I think it will. I think we're going to see a new trend starting to develop to the south with the dollar index. And with silver and gold, I think that's the market that I'm really focusing on. Noble metals. Silver's has been at this consolidated phase for quite some time, from 1406 to about 1436 range. It's been trading here sideways for about essentially since the beginning of September. But previous trend was bearish. As you know, the trend is your friend to the bend at the end, and the bend is at the end. And is that the bend or the bend is at the end? Whatever. We're starting to see a pivot with silver, and I feel very confident to say that we're going to see it back at that 1606 level, that 16 handle, and above that. But I think that's the first resistance that I am looking forward to. There is major opportunity here with silver. It's at one of the biggest disparities with gold. That's about 80 some odd. It takes about 80 some odd ounces of silver to buy 1 ounce of gold. So I think that's going to be and another reason to get into silver and gold right now is we're heading into the holidays, and it's going to create a physical demand for gold and silver because people want to buy jewelries for their loved ones. Gold's it's at that 1200 handle. It's at 1199.75 as of September 24th, 11 a.m. So again, it's trading sideways essentially since August 24th. A previous trend was bearish. We do see, I would say, it's pivot at August 15, 2018. There was no more sellers. We're starting to see buyers come in. They rallied a little bit, traded. It's at that consolidated phase. From the previous trend, from the high to the low, I put a fib level on, and it's at that 236 level. That's where it's at now. Maybe I feel more. I think the we're seeing we're going to see we're going to see gold at this 50% fib level. I don't even think it's 50% is a fib level. I don't think it's a number in the Fibonacci sequence, but whatever. 618 is more of a coveted fib level. But again, it's 1200 handle, and there's a lot of speculators out there that say $10,000 $10,000 gold, or 900 SDR for gold. I am I am very skeptical. I'm one of those guys that say I don't have to know everything. I don't know Bo Diddley. I don't know that much, but I don't have to know that much. I just have to know enough and have enough of a Jesse Livermore mentality with approaching the markets. And if you don't know who Jesse Livermore is, he was a stock trader, turn of the 20th century, and made substantial amount of money in the '09 and 29 crash. Or yeah, he wrote that book, and it's more on the psychology of trading and the emotional aspect of it, but just looking at the information and just taking it in, not just the technical aspect of it, but the fundamentals as well. But I just feel very, very confident looking at this chart and seeing gold hit 1256 or 1300, 1350 within, hopefully this time, definitely this time next year, but by the end of the year, hopefully. And last thing that I want to touch on is copper. Again, copper I would say it's trading sideways. It's been consolidated for quite some time. It's big range. I'm very macro when it comes to this kind of stuff. The lows were August August 18th at 258. It's at 280, 285 now. And again, it's just I see this chart and I see nothing but buy signals. Like I just buy the retracements, and then yes, buy the retracements, and it's going to be a great time. And I just want to thank you guys for tuning into my first installment. It took a little bit of your time, but thank you guys. And if you guys have opinions, if you guys have thoughts, if you guys have corrections that you want to make, leave a comment down below. I'm going to leave a bunch of links to these charts, bunch of links to I think I can get